Very important price action signal, or just the concept, is the so-called fakie, and some people may refer to it as bull traps, bear traps, failed breakouts. And technically what you want to do is you look for either long-term support and resistance levels or short-term resistance levels, or just single swings. And what you want to look for is a rejection of the level, and ideally you want to see that the candle and the market is piercing through whatever level that you have identified, and then within one candle, within two candles, very quickly reversing back and rejecting the level. You typically don't want to see a breakout, although there are cases where it can enhance the setup. If, for example, like here, you have actually a close above a high, and then within the next candle, you have a very strong reversal candle. But let's focus on what we're seeing here, and you can see that the market is in a very strong downtrend, and then we are reaching the previous support level. And what is going to happen here? A lot of traders who are short are probably going to take profits, which is contributing to bullish pressure. Also, a lot of breakout traders are probably getting into here, so selling more. Probably the people who have been missing a lot of those trending action here are then trying to get in short here. Their stops will be somewhere here, and then as the market reverses and is rejecting the level, the stops are triggered, and a stop on a short position is also going to contribute to buying pressure. So you'll often see that the market is playing around those previous lows and highs. There can be more than one rejection, and typically what you would like to see then is a momentum candle. Here you can see after the pin bar, then we'll have a momentum candle. The momentum candle also has a component of the pin bar, so we take out the lows once again, which is a very, very strong signal, a double takeout of a low. And then the same candle has also the momentum here in form of a engulfing candlestick. So it's completely outside of the past 1, 2, 3 candlesticks. So a very, very strong reaction. The market did move a lot in this candle, and it closed almost all the way at the high. The final piece to the puzzle, if you're then looking for a bullish move away from the level, you could wait for the market to actually clear the so-called flip zone. Previous support maybe holding as resistance here. So you want to make sure that you don't get in under a resistance level. So you could wait for the market to actually get above this level and then initiate your long entry. And you can see the market in the candle afterwards closed above the long level. Here we have another rejection, which is another stop run. And then you can see afterwards the market is really nicely taking off. Second, I love the breakout buildup. I talked about this a few times in the past. I think it's a very, very great pattern. It's also a component that you can use for any other pattern, so it can be considered an add-on. So what we have here is the market is in a strong uptrend. You can see from the bottom left to here, we are making higher highs and higher lows. Then the market hits a resistance level here, and we are seeing a bearish move. The bearish move does not break the last swing low, so we are not technically violating the uptrending structure, which is good. So we are still technically overall in an uptrend. And then the market returns to the previous resistance. But the most important thing is how the market is then reacting after reaching the highs. And you can see, whereas the first time we reached this high, the market sold off very, very strongly. It is in fact the strongest sell-off that we are seeing here in all of this uptrend. But the next time the market is reaching the level, there's just barely a move. The market is very closely staying here at the highs. And this, what does it indicate? It indicates a lot of buying pressure. It doesn't indicate a lot of selling interest anymore. Probably there was already a lot of buying interest, and when the market dipped here, the buyers got in here. And the most accumulation probably happened here at the last swing low. Then here, there is not more selling left. There's very, very little selling left. And then you can see the build-up. The market is really sticking to the level. However, we definitely always need to wait for the market to clear the high. So the final piece to this setup and the final piece to the puzzle here is you wait for a confirmed close above this level. Here you can see that we have a close, and then we have a retest. So breakout and retest often come very close together, and then the market takes